Hey everyone, welcome to the video on the S&P 500. It's about 10:30 in the morning. We're about an hour into the trading session. I want to talk about both the bull and bear case that we were discussing last week, and just talk about the developments that we've had and see where our directional bias is going to be taking us. Before I get into any of this, of course, not financial advice. I'm not your financial advisor. You're responsible for your own trades, manage your own risk, doing your own research, and this is just my opinion on the market. All right, so let's go ahead and take a look here. We've got bull case on the left, bear case on the right. What I will have to say, I'm going to focus on the bear case here first, because we did have a little bit of invalidation here. We are making new highs still on the S&P. So we were talking last week. At the time, it looked like we had 5 waves down, then an A, B, and then possibly an expanded flat up here to put in the 2. And we didn't see the accelerated selling that I was expecting to see. Really, the 2 should have been about right here. I had pulled this back up as kind of like a last hope, but we have overtaken this high. So this now leads me to believe that if this is an A here, we would likely be going. So this is again talking about the bear case. Going up for this A, B, and then working on that C again to create that B. If this is going to be going, higher, which it looks like it wants to, more than likely this is going to, let me just kind of zoom out here. So we've got A, B, and then we should be going up for the C. So I'm going to zoom out just a little bit more. I want to take a look at this whole thing. And again, this is going to be my first time looking at this particular chart, so kind of bear with me, because a lot of the charts that I do, at least in the videos, I see these all in real time. So I'm just going to kind of go down here from the top, go up here to the bottom, and then go from this pivot, pull myself down, and see where my upside target would actually be for this. If this is going to be an ABC correction, yeah, so we're still going to be looking for, at least 35.50, maybe up here at 37.30. But what that then means is we had 5 waves up into this A, then went A, B, C into the B, and then for this last move, what this really looks like, this looks like a 1, 2, and then a 1, 2, 3, 4 going in for the 5. So it looks like it still wants to go up before it comes down. I would say we are going to come down. This expanded flat does seem to still be intact, with our upside target still up here around the 3,700 mark. So that is still intact. The bigger question at the time was, are we going to go down or are we going to go up? And it looks like we're breaking up. I still say that sometime around here and mid to late October, November, just still looking at elections. Hey, Paul, how are you doing? Still looking at these elections, I think we are going to fall after that. But at least for now, it looks like we're going to continue going up. So let's take a look at the bull side here for just a moment, just to flip over here and take a look at this guy. All right, so this is an extremely bullish case. This does not have us coming down lower, but I think the upside count here is intact because this does take us up to 3,700. So what looks like it's happening, is happening here, is we've got this from down here. Remember, this was the ABC. We all agree that's an ABC. This is an important ABC here. We have 5 waves up into the 1, go down here into the 2, 3 waves down into the 2. Then it looks like we do have a 1, 2. We're working on the 3, right? We're working on the 5th move of the 3rd and coming down here for the 4, which is probably going to retest these highs right here. We're going to fill the gap. We're going to test this high over here. Probably going to get some resistance there. We'll retrace a little bit, then we'll rip to the upside. Basically to demolish all the people that are like, we've got a double top. I'm going to go ahead and short here because we're going to be going down now. Does not look like that's going to be what happens. So that is not what looks like is going to be the case. But this upside count here, I think is valid. And again, based on this, I think this is probably the best area to be shorting, around 3,700 to 3,740 or so. So let's go back to our bear case, because really the bear case is the primary. All right, so let's go back. Let's go ahead and redo this. So I don't see this as an ABC anymore. So I see an AB, but then you know what I've got here. Let me remove this guy. Remove this guy. I'm gonna redo some of this count because I think it's appropriate to do so. All right, so going back over here, we're going to do our Elliott impulse wave. From here, we've got a 1, 2, working on the 3, 4, then we'll go up here for the 5. Okay, and that's going to be on a larger degree. So we'll put that guy right like that. Okay. And again, going back to our bull case, we're still in line with that particular move. Okay, so we're still targeting a very similar target, at least for this move. But now the question is going to be when we do get up here, right? So when we do test these highs over here, let me just go ahead and tag this off because this is going to be important for us to to remember when we get there. So we're just going to go ahead and tag that off right there. It's pretty close, not quite exactly there, but yeah, basically 34, just shy of 3,400. That's going to be where I think we're going to be getting some resistance. And then we've got the 3 there. And then from over here on this particular chart, let's go ahead and do the same thing. So that's, 33.9875 is where that top was. Maybe I'll get this one. Pretty close, 33.97. All right, so we've got this up here. Again, we've got the 3 up there, right? So this is all falling in line, at least for the upside target. And the reason why I'm saying this is because, well, we took out this high from last week. We took out that high, and we are, we're invalidating any immediate bearish count. So this again leads me to believe we are going to be seeing more upside, and it's probably going to happen here pretty soon because again, let's just go ahead and drill down into this a little more here, putting in this 3, right? So we've got a 1, 2, and then we're going to be putting in the 3. All right, so from here we've got a 1, a 2 right here. So again, this falls in line with what we've already got over here. 1, 2, and then we've got the 3, 4, 5 to complete that 3. And I could dig a count out of this if I needed to, right? So I can see I can see an impulse here into the 1, ABC into the 2, working on the 3, 4, 5 to get into this 3. Now the timing isn't exactly right here. I do believe that when we get into late October, early November, we'll see a buying climax, and we'll see probably a pretty significant short squeeze as well. I think that timing is right, but the grinding that it takes to get up there, that's going to be where we're going to, we're just going to have to just play the market as it sits. So this is what I'm seeing right here. I see that we are in the middle of wave 3, and we're probably in wave 5 of this wave 3. We'll be getting into the 4, and then we'll go into the 5 of the 3rd, and then we'll see a little bit of a pullback. This is probably going to likely be next week or so. I think the market still has to go up a little bit. If you're looking at open interest on the S&P 500, we've talked about this before. Let me see if I can pull up what the open interest was from last week. Let me find this. We were just talking about this on the Discord earlier today. All right, so open interest on SPY. Let's pull this up. All right, here we go. Here's open interest on SPY. Right here is what is the most important. This is what we are interested in basically between now and the 14th, basically the next 2 weeks. Most open interest is on the 7th of August, just a little over 500,000 open interest, and 78% is bearish, which tells me we're probably going to be going up. Also right here, and we're talking about Friday, right? So between now and Friday, chances are pretty good we will continue moving up. 12,600 volume on Friday last week, right? So this is old data, right? So this is data from Friday. 61% of all of the contracts that were traded were puts. Only 38% were calls. And look, we've had a significant gap up. These people right here, the one from August 3rd, right? The ones that traded the August 3rd, so today's expiration, significant amount there, and 52% were bullish, and they actually made out pretty well. The target though is going to be way down here on the 21st. So we're talking 3 weeks from today. 70% is bearish, so that leads me to believe we're not going to have a significant drop just quite yet. We've got September 4 million contracts, 63% bearish. Now, 80% of these were puts, and I'm just looking at all of this bearish sentiment, and I mean, you have to agree with me that this is a bearish sentiment that we have on the market, like significant. The only places where we don't have a bearish, like significant bearish sentiment, you see August 19th, but look at how much open interest is there. There's hardly anything there. Over here, 13,000, 54% calls for August 26th. That's insignificant. Insignificant. Look, this is actually hilarious. September 2nd, so right around Labor Day, 95% bearish, and a significant amount of open interest, not quite 100,000. As we get closer to these expirations, we're going to start to see these numbers go much, much higher. More than likely, they're all going to be above 200,000-300,000 open interest. We're going to have to watch these as we go, because as we get closer to these expirations, watch the volume as we get closer and closer, right? So we're looking at this. We've got a 38 to 61 ratio on Wednesday and Friday of this week, and the open interest is pretty significant. Fridays is, of course, more times than not, Friday expirations are going to be higher than the the Monday and Wednesday expirations on options on SPY, but they're still weighing bearish. You don't see heavy bearishness until you get to like the 14th. You got 76%. The 12th, you got 70%. When this gets above 70%, especially when you see like 97%, 78% bearish, not a whole lot of open interest, but all in all, 70% bearish on these almost 3 million contracts that are open. That is significant. Well, anyway, I just wanted to bring that up because it's very easy for people that have the money that it takes to move the market. It's very easy for them to take advantage of the retail or the other money that is exposed here, right? It's very easy to see that 78% of the contracts that bought on Friday were bearish, and now they're underwater, right? And as we continue looking at this, we're saying that the charts kind of insinuate that we are going to go higher. The open interest on options are indicating that we're probably going to go higher. Sure, there are a heavy amount of people that are leaning bearish, and they're putting their money where their mouth is. They're leaning bearish, and at some point they're going to be right. But for now, I think the charts indicate that we probably will continue to move to the upside. And analyzing this, there is money to be made by destroying, let's just say 70% of these 3 million contracts. So you've got basically, what would that be, 2.2, 2.1 million contracts that are going to be, essentially expiring worthless, right? Because we are close. We are darn close to making new highs here, okay? So anybody that's holding a short contract is probably going to lose in the short term. I would be very cautious opening up puts on, at least on SPY, right? We're talking about SPY here. We're talking about SPY. We're talking about the S&P 500. It's indicating that we are going to be moving higher. And once we get up here, let's just see what happens when we pull back, okay? So, I'm talking about us getting up to potentially 3,700. How we get there, I think it's pretty defined on how we find our way up to 3,700. I think we're on a 5-wave impulse that is probably going to be the completion of an ABC correction. I don't think that this is, I don't think that this is realistic at this time for us to get up to 4,000. I think that the technical aspects of the chart can support it, but man, it would take a lot to get up there. It would take a lot to get up there. Now, the other part to this is also taking a look back here. What I want to point out here, I don't have the volume on here because I didn't want to, I didn't want to just, clutter the chart with a bunch of indicators. This is just a flat candle chart with just some Elliott wave on it. This whole move up here was on decreasing volume. So we do have to keep an eye on volume as we go. If we start to see a continued decrease in volume on this move up, then I will get worried. Also keeping an eye on the volume, volatility index, keep an eye on that as well, because that's also going to be an indication that we're probably going to fall if the volatility just continues dropping slowly as volume drops off, but the price keeps moving up. If that happens, then you need to start worrying. For right now, until we start breaking down below some important moving averages, and I know we have not, I don't see any reason to be overly bearish on the market. Now let's wait and see what happens, if we get to 3,700. And when we get to 3,700, I would expect there to be significant profit taking up there. I think there are technical reasons why this level up here is going to be resistance, right? Going back to our bear case, if this is going to be what happens, right? Again, the timing might not be right, but I think the count's right. I think the count is right here. Probably going to find our way up here at, close to the 123.6. Let's wait and see what happens here at the 100, and that's going to be at about 35.50. Watch to see what happens at 35.50, and maybe this goes that high. Maybe this 3 goes up there. Maybe this 5 goes up here, right? The 5 of the third, and maybe this 3 actually goes a little bit higher. Well, we're just going to have to wait and see what happens. But we are going to have to contest with a pullback. And maybe this pulls back just to the support, right? Does that have a technical, a technical backing behind that? All right, so let's take a look at this. 1, 2, okay. So we've got the 1618 and the 175 sitting right here. This is basically our zone, right? Our zone right here is going to be anywhere between 33.60 and essentially 33.85. So I could definitely see there being some resistance up here. So this is a good area to be watching for some resistance to the upside. It makes a whole lot of sense. And then if we make that happen, I would expect that to be support, which supports this 4 wave here. All right, and then of course the 2618 is sitting up there at 35.90. The 100 expansion is sitting here at 35.50. The 123.6 is sitting up here at 37. Basically, let's just call it 3,700 because really in all fairness, that's where we're aiming for. We're aiming for 3,700 before we fall down. All right, so if that's a 1, 2, then we have a 1, 2, 3, 4, 5 into the third. Then we come down for the 4. Let's just see where that 4 could fall back. And now we're talking hypotheticals at this point. Obviously, we're going to be charting based on something that doesn't exist yet, which I'm not always a fan of doing. But let's just go ahead and take a look here. So if we do make our way up to 35.50, 236 is right there at 3,400. That would make a whole lot of sense. The 382 is going to be sitting down here at 33. So somewhere between 34 and 33, assuming we make our way to 35.50. I can see ourselves doing a pullback, maybe not quite this far. Maybe it does only come back to the 236, which would be right there at 3,400. That makes a whole lot of sense. And then, boom, look at that target, 3,700, almost exactly, almost to the dollar, 3,700. So this seems plausible. All right, so we're going to pull this out because this is going to take time. I'm only looking at a 4-hour chart here. So this looks like what we're probably going to get. So I'm going to pull this guy out over here. Again, this is going to go basically to November. We'll pull this out. We just have to watch this. It looks like we want to move up. And again, the reason why I think it wants to go up is simply because we overtook this high here. Yeah, we're having a little bit of a rejection, but we overtook this high. So it leads me to believe we're going to see higher prices. We're going to see higher prices because we overtook that. Our bearish count, which was from up here, 1, 2, 3, 4, 5, A, B, C, then we should have seen a sell-off, and we didn't see that sell-off. So now we go up. Now we go up, and again, we're looking for 3,400 over time. Probably is not going to happen today. If it does go up, it's probably going to happen later this week. Wednesday, Thursday, Friday this week is probably when we're going to see that rip to the upside, and that's what I see on the charts right now. Okay, all right, I think that's it for right now. So let's see here. Yeah, that's all I've got for right now. So if this video did help you in any way, shape, or form, like, subscribe, share, all that good stuff. And of course, wherever you are in the world, I hope you're having a good day, a good night, a good evening. Stay happy, stay healthy, and take